Hey guys, I'm Stephen Himmel. I'm with Ventera Capital. We have a venture arm called Melatas Ventures where we focus on consumer and consumer technology opportunities. Within consumer, primary focus on what we call the ESY space. So anything better for the environment, better for society, better for you. We look at a lot of businesses within health and wellness, functional food and beverage, vitamin mineral supplements, sustainable apparel, general sustainable CPG. On the consumer technology side, we look for businesses that are improving the digital user experience, that are accretive to our consumer side of the portfolio as well. Series C to Series C, we have about 23 businesses in the portfolio today.
Wow, you're saving the world too, Sita.
Hopefully that's a general theme. Hey guys, my name is Sita, and as Kendra very eloquently pronounced my last name, I'm from Thailand. It's actually partially what inspired us for the name of the firm, Siam Capital. And it's largely anchored around this thesis that if you leverage capital in a purposeful way, it can make for a lot of impactful change. And frankly, I think everyone here feels like they believe it as well, and hopefully we can try to convince some of you guys as well. So our fund's thesis, we focus predominantly on the intersection of sustainability and consumer technology. And the core to our thesis is that sustainability and climate change is one of the greatest challenges of our generation. And with that, we also believe it's one of the greatest opportunities for investments and for returns. So our particular focus is consumer largely because even in the US, I mean, we all see it, and we're all here, so hopefully we all drink the Kool-Aid that consumers are going to be a massive driver in that change. We have 70% of our GDP. It largely goes to consumer spending. So yeah, we're excited to chat about what are some ways we can make a sustainable change. Capitalism by way of consumerism, if you will.
Peter Pham, I'm from LA, Science Venture Studios. 10 years now, running an incubator. Prior to that, I was on the founding team of PhotoBucket, if anybody used to use that back in the MySpace days. Bill Shrink, we sold that to MasterCard. And as an incubator, we're a little bit different from most funds. Our current fund, $75 million. We're closing our third fund right now. And we've done everything from incubating Dollar Shave Club, starting it out of our offices, to MeUndies, to Dog Vacay, which became Rover, and most recently, Liquid Death. Hopefully all of you are fans of Liquid Death. Also started in our offices. And it's been, for me, I like crazy shit. Like razor blades 10 years ago, honestly, it was a crazy idea. Liquid Death, water in a can, right? Which currently is the fastest growing non-alc beverage of all time right now. And it's really about tapping into mass. And today, for me, it's what are you doing on social? Because Facebook advertising is dead. You really got to build TikTok, Instagram, really TikTok. So that's it.
Hi everyone, I'm Alex Malamatinas from Melatas Ventures. We invest in innovative companies throughout the food and beverage ecosystem. So a focus on better for you branded products like an Olipop, Magic Spoon, Lemon Perfect, being some of our brands. We invest early stage, seed Series A, and then we really partner with the founders to build their teams. I'm very passionate about the space, and I think there's a growing interest there. So very excited to be here with these panelists.
Thank you, guys. I'm excited. This is going to be great. So let's get to the big thing that everyone is talking about right now, the market, the economy, inflation, what's happening. What are you all seeing in terms of valuations for companies, how you're looking at companies now versus, let's say, even 6 months ago, a year? What has that impact had on you as an investor? I'm going to start, Steve.
Yeah, I would say that kind of the two buzzwords that you hear a lot about now. One is capital efficiency. The other is just profitability. The days of acquiring customers with an unprofitable business model. You need to be profitable first purchase, as opposed to having a J curve where you spend a bunch of money to acquire customers in hopes that they pay back over time via high LTV. Just doesn't work in this market. That's one thing we're really looking for is first purchase profitability. outside of that, really a clear path to an omni-channel strategy. We look at a lot of businesses that are digitally native. They launched on Facebook, Instagram. The quicker that you can expand your footprint from a physical retail standpoint, the better. You really need to diversify outside of just the digital channel. It makes sense to grow your brand that way. And then finally, really looking for novel marketing strategies. Again, the days of Facebook, Instagram, customer acquisition, it's just so much more difficult nowadays. Really looking for more interesting things like a TikTok-focused marketing strategy, and more specifically focusing on virality and community around your product to really create stronger tailwinds to help you grow your business and grow your brand.
That's great. And when we think about the marketing strategies, I want to come back to that because so much of how you reach profitability is driven by your marketing piece of it. And Sita, what are you seeing in your space in particular when thinking about the market valuations?
Yeah, I mean, given we all are intimately involved in the consumer landscape, we get asked this question a lot, right? Because when the value of the dollar you have in your pocket is not going to buy you the same thing at the store, it feels like a very pressing problem. So something that we've realized is that, like, in seeing how the market reacts, especially in the consumer space, at least it's our hypothesis that there is potentially going to be a bifurcation around consumer products. And what I mean by that is that if you look at how a lot of these public equity stocks are performing, companies that are trading in, necessity goods, like those companies are doing fine, right? Companies that are trading in the mid-market or the nice to have, if you will, those are the folks that are suffering, especially, to be very blunt, if they're a money-losing business. So as we think about how do we get involved in the space, what do we think about the future, we feel like it makes sense to tackle sort of the barbell approach of the market. The products and services that are really going after the masses and very much exist for a need to have. And then obviously on the higher end, there are certain products and services where, to be very transparent, they cater to a pocket of the population that is not as vulnerable to inflationary headwinds. So I think that as we think about the consumer landscape or what's interesting, when we chat to companies, we want to better understand, like, who is your core demographic? Can you sell to a lot of people at scale? Or can you really identify who you want to sell to? And then those folks, like, how do you make sure that they're protected in any other downturn?
And that's the biggest thing, because we have to be able to scale, go outside in order to reach profitability, or we tap out in terms of our niche market. And so, Peter, for you, when you think about, the biggest exits of all time, people step into your office and, like you said, they're making bank. So how are you looking at valuations now in terms of the market?
Mine hasn't changed for a long time, and I think the market corrected it back. So if you're raising, I'll put numbers, right? So if you just have an idea, single digit. It's, there's no double digit pre-money valuations. I always say, nothing ruins a raise better than numbers. So if you're going to raise before you make money, do it, and be okay with the low single digit, 4 pre, 5 pre. 10, 15s don't exist. Once you start selling, that's revenue. You really have to prove that you can replicate that. And so the days of CAC, LTV, right, customer acquisition costs, I don't care anymore, because that's never, in the history, in 10 years I've been doing this, of every company we've incubated, as you grow, CAC always goes up. No such, everyone likes to show the chart. It's going to get better. It never does. So I don't actually expect profitability right away, but like a path for growth and a path of which you can find an audience that's really cult passionate about the product. So it's okay. To me, there's no such thing as a TAM, because if you're creating something new, you have no idea, right? But can you create that culture and just fandom? Like, we have 300 people with liquid death tattoos, random people. That's cult, right? So that's the type of stuff we're looking for. And so valuations is all relative. Public comps, like Monster is a $44 billion market cap company. Trades at 10 times rev. That's kind of like, so think there. You're not going to get much more than that if you're a typical CPG. 5 times to 10 times is probably the market. Investors might pay for next year's revenue, maybe the year after, but you really have to bring in that story that you're gonna be able to do it. Community, multi-level marketing, like door-to-door, something different that isn't just, we figured out this interesting ad on Facebook.
Wow, That's fantastic. There's so much we're going to unpack there in what you said. And Alex, what are you seeing? How are you looking at the market through valuations?
Yeah, so just to build on a couple points that Peter made, I think, when the market is very hot, like it was last year, investors are more willing to pay multiples on future revenues. And I think we were seeing a lot of that. I mean, we were, whether it's 5 times, 10 times, and, paying for forward, 1 year forward or 2 year in some cases, which, we've always found to be quite challenging. Of course, some of the successful brands really grow into that. In this environment, there's just a lot of macro uncertainty. There's less visibility. So, you're seeing investors paying perhaps lower multiples and paying multiples on last 12 months or current sales. So, I think for founders, sort of having realistic expectations, places them in a better position. And I think ultimately they need to grow into these valuations as well. So, as a founder, obviously you don't want to get diluted too much, but you don't want to set yourself up for failure either.
But category killers, Magic Spoon just raised the $50 million beat,
right? So Magic Spoon, Liquid Death, Mudwater. I mean, these are brands, as you point out. I mean, category creators, and they're all of these brands seem to be growing into their valuations. And you're right. In the early days, there's perhaps no revenue, and so it's really a vision, and you have to buy into that.
Well, and it's interesting because we keep talking about growing into valuations, scaling, getting to profitability. How do founders do that, especially on the offside of the market? And you talk about CAC. The amount of founders where I look and it's like, my CAC is shrinking, but I'm growing. That's not the reality. So let's talk about the tactical sense of what founders can do to grow into their valuations. You guys want to bring it back? Alex?
Sure. A couple things. I think, and Stephen touched on this, I think, improving your unit economics, particularly in this environment. So, strengthening your margins, perhaps cutting costs, and really extending runway, I think is, cash is king, and particularly in this environment. So the longer that you don't have to capital raise, perhaps the better, and you'll likely be in a better position if the macro environment improves. And then ultimately it's allocating your resources. So, these brands have limited marketing budgets. Do you allocate that marketing dollars to digital marketing? If your CACs are very high, which for most brands in this environment, you perhaps want to limit that, or at least you really want to identify what returns you're getting on that spend. And then perhaps other, successful DTC brands are exploring entering retail. And so, considering spending marketing dollars in retail and really helping them scale that way.
I would also say, so we always use the word scale. So look, getting to the first $1 million in revenue, kind of expected that anybody should be able to kind of get there. And you'll notice 5 gets hard, 10 is really hard. And after that, 20, very, very few companies get to that 20. It's not just twice as hard. It's literally 10 times and then getting to 50. So that's when we think scale is like, is there a path to get to 100 million revenue? And it turns out really, really hard. So everything from supply chain, which I'm sure everybody here kind of, seeing $10,000 containers versus $1,000 containers, right? Everything multiplies out, and it turns out the more you grow, the more cash you need because you need inventory, right? And you need to be spending on marketing. And so I think of also strategic investors think through that, which gives you cheat codes of distribution and marketing, right? So for us, it was for Liquid Death, 7-Eleven invested. Well, that gave us 9,000 doors in the US. We had Live Nation invest. Well, they have 25 million fans walk through their events, right? We're the exclusive water. So like think through those things. It may be a celebrity, it may be an influencer, but really figure out what's gonna engage and grow. Even we're doing a ton of Web3 in CPG, so our serial off limits. We're tying with NFTs and artists and creating boxes, which gives us distribution and gives us a community that really cares about the product for distribution. So I think as investors, we want to hear what is the future of marketing, not just what you're marketing today, right? What is the future? What are you thinking? What are you doing that might be showing a sign that, we don't know. If it works, it works. If it doesn't, it doesn't. If it works, holy shit, you're the only person doing it, you should win.
Well, and you just unlocked another form of omnichannel. We think of omnichannel or 360 marketing as like, I'm going to do my website, I'm going to do social, and I'm going to be in retail. But to really expand our brands, the Live Nation example is amazing. I'm going to be in concert venues, I'm going to do collaborations, I'm going to work with celebrities, so all of those things.
We got the founders of GoPuff to invest, right? So they're everywhere. So, right, and they just bought Bevmo. So think through some of these strategic things that you can start placing in. We had the second largest aluminum can manufacturer invest. Well, that makes sure we get cans because there's a massive global shortage of cans.
Right.
So
yeah. Well, and I think, Sita, from your perspective, because so much of what you're doing is tapping into sustainability, new ways of looking at the environment and companies you're investing in, what are you seeing in terms of marketing tactics that your founders are doing to help grow their businesses?
Yeah, I mean, I don't know if this is too generalist of a term to describe what Peter was saying, but a lot of what we're looking for companies to do is, simply put, growth hacking, right? Like, is it through celebrity partnerships? Is it through strategic investors on your cap table? Is it through a partnership with an entertainment industry expert? Like, whoever it might be or whatever it might be, it's more like, have you found a way to essentially not pay one for your new customer? And that's simply what we look for in terms of whether or not you can grow in a way that is much more efficient. And then to your question around companies and positioning for sustainability, it's a pretty complex question, to be frank, and we think about this a lot, largely because I think a lot of companies in this day and age, in many ways, they position themselves as, and I'll be very frank, we look for companies that are better for planet or better for people. But it's honestly pretty hard to find a founder or a company who won't position themselves that way in some capacity, right?
Right.
So I think when we think about sustainability, we either think about it as, does your product or service in and itself, just by existing and by scaling and growing, you are providing a more sustainable alternative to something on the market? And if the answer is yes, then, you know, just by existing, you are making a contribution to a sustainable future. And of course, we alluded to supply chain, but as supply chains get extremely complicated, that's also another way that we've seen companies innovate and become a lot more sustainable in how they, be it source, be it work with providers, even just bringing down their freight costs, right? If they are more localized in a cost-efficient way. I think that it's something that we're seeing consumers, frankly, increasingly care about. So it would most likely be in the company's best interest to also increasingly care about it, or at least we believe that.
That's a big piece of it too, because if you don't care about it and you're not thinking about it, you can't even expand, and then we're all saying the same thing.
Totally.
And Stephen, you brought up TikTok early on, and you also talked through kind of the digital space in terms of what founders can do. So what's your advice to founders who are in this phase of, I need to grow to attract investors? What are the tactics that you're advising on?
Yeah, so I think, you know, high level, it's important to keep in mind that there's always going to be windows of opportunity that are going to be kind of the hacky, arbitrage-y type ways to acquire customers. If you look back a few years ago, it was podcasting. It was a new, novel experience. There wasn't a lot of advertising dollars going to that channel. You have a company like Onnit, which is a supplements brand, which basically became a multi-million-dollar business off of Joe Rogan's podcast. That window of arbitrage, if you will, slowly closed because more dollars were spent in that channel, ultimately driving acquisition costs up. Prior to that, it was, you know, Facebook, Instagram. That window obviously has, you know, very significantly shut. You know, what we're seeing now is obviously a lot of companies leaning into TikTok. So I think it's important just from a, you know, high level to, you know, keep a positive mindset. If things are not going well right now from a customer acquisition standpoint, just believe that alongside new technology and new platforms, there are going to be novel ways to acquire customers. What does that look like? I don't know. Maybe it's evolved around virtual reality or augmented reality. There's going to be something, and it's just important to kind of, you know, stay woke, if you will, and identify those opportunities earlier than your competition. And so I would kind of just like lead with that. I wouldn't try and push too hard into marketing channels that are not working. You know, if they're not working, scale back, slowly test, iterate, be patient. You know, right now, as the panel has said, it's all about conserving cash. You know, that's king. And so just take your time with everything and wait, and there will be things that pop up.
I love that. Test and learn. That is the theme. And when you test and learn, make sure that you're listening so that you can pull back. And also, you know, a lot of what we hear from founders is, what should I be pitching in terms of my business right now, right? So what is the most important thing? And clearly as founder or as investors, we may have a different thesis, but there are some general things that founders need to be prepared whenever they come to you, whenever they call you. So I'd love to talk about, what are you looking to see from founders who are really searching for investors to fuel their companies? Sita, do you want to start? I'm going to switch it up a bit.
Sure. I mean, I think it kind of goes without saying that it obviously depends on the business. But if I were to simplify it, I would say there's, say, 3 questions that investors are trying to get to the bottom of as immediately as possible. The first is, you know, is the market interesting? How big is the market? Is there a sizable TAM? Are they looking to disrupt a TAM? Essentially, is this solving a problem that either currently exists or is likely going to exist in the market? I'd say the second question to counter that is this product or service the right solution to that problem? Are they the right team? Are they well equipped to position whatever it is that they're building to solve that problem? And obviously, I'm oversimplifying it, but it really is like, what is the problem and what is the solution? And of course, that's packaged in many ways. And I would say the third question, and something I would especially highlight for this group, because if I were to be very blunt, in the consumer landscape, there is somewhat of a bias against consumer investing in many ways. And it's, you know, there's a reason that some folks say, like, I don't look at any CPG products. I don't look at any stuff in the consumer space. And it's largely because there is this stigma around moat and competitive advantage, and put in a different way, strategic advantage. So I think as we're thinking about potential investments, as a company is thinking about how do they build, I think a really important question to answer is like, what is your moat? And it doesn't have to be something as tangible as, hey, I've built a new piece of IP. It could be something like, we created a new market. We're in many ways socializing the idea of drinking water in a very, very cool way, to use Liquid Death as an example. So obviously there's a whole other slew of questions, but I would say if you guys can really just nail down those 3, I'd say, milestone questions, you'll go a very, very long way in your conversation with investors.
I'm a little bit more simple than that. I would say a couple things. 1, don't get discouraged. Like, I've had 7,000 no's in like 10 years. So you will have to pitch, and startups, it's like music, right? I always think you hear a song, you're either gonna like move to like, I like that, who is that artist, add to my playlist. If you hear a song, you don't like it, there's no way I'm gonna convince you to love it, even if you listen to it 10 times. And so for me as an investor, I either love it or I don't. What I wanna see is the person I'm talking to absolutely fucking loves the idea. Like, and they can't sleep, they think about it 24/7, right? As far as like the TAM, this early, who the hell knows? Like, right, it's, do I believe the founder loves it? Do I believe the founder truly believes this is a problem and that they can figure out and navigate the ups and downs? Because trust me, startups, the highs are highs, the lows are absolutely suicidal, yes, depressing, right? And I've been there, so it's more of that, because we never know, but what I want to start seeing is like, is there some small indication that what they're thinking, what they're doing, what they're seeing is something that in 12 to 18 months, more people might think it's interesting. Because right now, the reality is the best investments is non-consensus and right. If everyone thinks it's a great idea, honestly, I don't even want to touch it, right? Because that means, trust me, not just this room, there's thousands of other people thinking about the same idea. You're gonna get copycat, and maybe you win, maybe you don't, but like, I don't like a lot of competition, right? So different, interesting, you love it, and so, you know, for me, it was always the founders. Dollar Shave Club, he walked in, that is marketing genius. And I've typically been focusing on that, right? Liquid Death, marketing genius. Water in a can, trust me, 6 months, people said no all day. Dollar Shave, 40 no's. Like, nobody would give us money, but we believed. And so I respect every entrepreneur. Try and keep trying, but make sure you love what you're doing.
So I'll give an example. I totally echo your last point around like the best investments are not when you're riding the tide alongside everyone. So Alex and I are also friends, and last summer, we co-led an investment with another fund into a business that was using technology in the food space to recreate proteins that are found in breast milk, to recreate an alternative to infant formula. For the longest time, people were asking questions like, is the infant formula market big? Is it even broken? Will all the existing players take up all of the market share of the market? Like, is this technology important? And I'm sure everyone's been reading the headlines about the massive crisis that we're in. And I think one of the most surprising things is people often say like, oh, how did we not know about this? But the reality is we did know about it. It's just we didn't have enough people looking at the problem. And I'd say that that's a really interesting way to think about some potential opportunities or business to create. It's just look where no one else is looking. And frankly, if you have other people who resonate with the problem more, chances are they're going to like that song more than anyone else.
I would have said instant yes. Like, there's a protein shortage in the world, like, period.
How do you solve for it? Let's do it now. And I would love to hear from you, because when you think about your thesis, it is problem solving. That's how you started.
Yeah, I mean, I'll give a little bit more kind of like tactical advice, I guess, from a fundraising standpoint. I would just say that if it's not your first round of fundraising, if you're past your kind of seed round, just don't go back to market when you have 1 or 2 or 3 months of cash on your balance sheet. It's not a good look. It doesn't put you in a position of negotiating power, and it just becomes a very risky situation. We just went through one of the strongest 10-year bull runs of all time, where you could go back out to market very quickly and access investor capital. It's just the times have changed. They change very quickly. And so what I tell our portfolio and folks I speak to is, kind of have at least 6 months of runway just to have those negotiations with folks. Be open to deal structuring, be open to doing bridge rounds. We're really focused right now on investing in convertible note rounds. It provides some nice downside protection for us in the case that valuations do continue to come down, in the case that we're entering a consumer recession and top line revenue doesn't hit your projections. It just allows us to enter the business at a more favorable valuation down the line. So be open to structuring and just think very tactically when you're going to market and having conversations with investors.
That's great feedback, and I think that that's the through line now in the future, and kind of how we've looked at it in the past, but we sometimes forget about those characteristics whenever we're trying to figure out how do we approach investors. And Alex, do you have anything to add to that?
Yeah, I mean, a lot of good points were covered here. I think, at the end of the day, it's also the human relationship. So as Peter said, I mean, you either like the song or you don't. I think to take it, one step further, I think building trust with your investors, and, that takes time. And so sometimes, as an investor, you might not invest on the first day, but as you get to know the founder, you believe his or her vision, understand what they're talking about, and then also as they start demonstrating, whether it's the product, whether it's initial sales, like I told you I was going to sell, in retail, or I told you I was going to sell cereal online, or whatever it is, the consistency, I think, becomes really important.
Well, and consistency is key. And as we prepare to end our session, I want to do one last rapid fire exercise. So I want to very, very quickly, I'm going to ask you, and this is the question for everyone, what is the one characteristic that you look for in a founder whenever they are pitching you? So this is super quick. You guys see the timer. Here we go. Alex.
Resilience.
Peter.
Yeah, you got to be able to run through walls, like never give up.
Grit. Just another synonym for resilience.
Lead with bad news, communicate, don't be afraid to tell it how it is.
All right, resilience, grit, never give up, lead with bad news, never forget to tell it how it is, and more importantly, make the ask. You gotta also ask. So we wish you all a lot of luck on your investing journey. Thank you for joining us, and we hope that we see you again next year. Thank you.
Thanks, Kendra.